Ethereum, for all the hate that it's gotten, has also done pretty well. I mean, like 40 something percent in a year. And I mean, this is what happens when you're in crypto. Your idea of good returns gets skewed.
This episode is sponsored by SKALE. SKALE has differentiated itself from other layer ones by offering users a network of gas-free, interoperable EVM L1s where the user experience comes first. Explore the gas-free ecosystem at scale.space/ecosystem and follow their journey on X at SKALE Network. To learn more about the gas-free architecture and growth of the SKALE ecosystem, visit the SKALE Research Hub at scale.space/research. This episode is brought to you by Ledger, the global leader in digital asset security. Celebrating 10 years of innovation, Ledger remains the most secure hardware wallet for your crypto and logins, trusted by 7 million users and securing 20% of the world's digital assets. Follow the link in today's show notes to grab your Ledger now.
Nothing said on 0x Research is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and any views expressed by anyone on the show are solely our opinions, not financial advice. Boccaccio, Ryan, and our guests may hold positions in the companies, funds, or projects discussed.
Hey guys, welcome back to another episode of OX Research. Today I'm joined by Ryan Cashflows Connor. We've got Mark and Dan Smith, our resident REV promoter, preacher, and lover. How are you guys doing today?
Our descendants will sing songs of REV.
Doing fantastic.
Well, good on man.
Do we have maybe just to comment briefly on the markets? We had some green and excitement the other day. Now we're seeing some red and disappointment. Today it seems like just a little bit of volatility here in the beginning of the year. Does anyone have thoughts on maybe this week, next couple of weeks, or are we just sorting through some kind of early year repositioning and uncertainty about what's ahead?
It's all TradFi's fault, right? They had this like hot ISM prices paid print, and everyone kind of went nuts. And now Trump is tweeting that the Fed needs to cut rates or something like that. I think people are overly fixated on interest rate levels, given the pain that they experienced in 2022. I think that's largely irrelevant going forward. Like clearly, like rates being high did not cause the like massive like sell off in junk bonds that people predicted, or like kind of like these like challenges in the refi market. So I think it's like just like classic knee jerk reaction from TradFi folks.
I think James Kristoff said something bearish in the 0x Research Telegram group, so I'm officially bullish from here.
Same.
The inverse James Kristoff index. We might need to start running that one up.
Just catching strays. I'm sorry, James. But hey, that's a shout out, call to action, a little CTA here for the folks. Join the Telegram group. Subtle pat on the back here to all of us. I think it's the most active Blockworks Research podcast Telegram group. I don't even know if that's true, but I'm gonna put the stake in the ground anyways.
Yeah, there's a lot of chatter. It's hard to keep up, but that's a good thing. There's always good discussion and good alpha in that group.
Yep, a lot of conversation from us, but also from the community. I think a combination of things going on in the trenches, but also ideas and things being built that people are interested in, which is great to see. A good mix of topics. All right, let's jump past the markets then. I want to call back to our last episode. We talked about a few things that I think maybe need some updates. One was we actually briefly mentioned the Mira meme coin and the recipient of such. A little bit of like a Crispus happiness event, and then it turned out that this particular individual ended up creating some meme coins and endorsing them and selling them. Supposedly unwittingly, but I think upon deeper investigation, it was revealed that he's been in the space for a while, has maybe done things with NFTs in the prior cycles. So our kind of nice story turned out to be maybe not so nice. I guess once you get some you get some attention and people find out that it's pretty easy to launch a meme coin and rug your followers. We've not found a cure for that one yet. I think many people are still just too easily tempted.
I was the one who was bullish on that launch, right? And that, yeah. So my bad.
That was also like minutes after we closed down the recording. It was like, oh, we just said he's like, I mostly did something nice, but then boom. I actually got I got slandered in the YouTube comments of that one too for saying it was a good thing. Or no, so I said I was skeptical, and someone was like, "You're an idiot. You shouldn't be skeptical." Well, I'll pat myself on the back one there, Mr. YouTube commentor.
Yeah, I think it's a good idea. In practice, it did not work. But it's like, I don't know, you're stepping out into the battlefield. Like,
Is it a good idea? Should we be doing donations with meme coins? Is that a good idea? I don't know.
I don't know, that counterfactual of like how much would they have raised had he not done a meme coin, or I mean, I don't fully know the story. He accidentally burnt it. Was that real?
I think based on the stories and his, knowledge of the space, having, been in crypto for several years, it seems unlikely that he did any of this unwittingly. He made it sound like publicly initially that, he had created some tokens and then burned them and then bought them back and then resold or reburned them, etc. That seems very hard to believe given just the history. Being an ETH NFT trader, etc. I think you would have to be quite a bit of a novice, and that seems unlikely.
Yeah.
Does it make a difference that he said he's going to try and return some of the funds to people who lost money?
I guess at the end of the day, if you like raise the funds to go to this cancer research, like then net it's probably a positive. Like again, if you're in the trenches at that point, you know what you're getting your hands on. Like that's on the trader. I really do think that at this point, he's not bringing in my mother into trading this coin as thinking it was a donation. Like that didn't happen.
Yeah, I think in practice this one didn't work, but still pro gamification. I think it amplifies usage and could do some good on some fronts.
It seems like the best at that is Vitalik. I mean, he got with the even in his latest thing with the Mudang, he got those coins and then adopted Mudang. And for those who don't know, Mudang is a pudgy hippo in China, and Vitalik's done this with other meme coins that he's been donated as well. He just sends them to charitable causes. So that gamification, he seems to be the one like maybe leading it the best. But yeah, it's not that's more of a relying on good nature of one human versus any kind of like real game theory.
Yeah, I think I will say, at least to not to necessarily give him any credit, but for people, interacting in the space, like I think you should know what you're getting into. Like, I mean, it's clear they're meme coins, whether it's going to a charity or not. Like you're playing the game of, is this thing going to go up some amount or go to zero? So you have that expectation of potential total loss regardless. Now his actions, like, yeah, I think it's hard to support anyone like going on this tirade of making new coins and dumping them onto the followers that they just gained from the event. But I think there'll probably always be some semblance of that in the same way that celebrities, try to milk a couple extra dollars from their followers in the same way. Another one, though, we've got another topic from last time that we wanted to jump back to. Virtuals. We had looked at some circulating revenue numbers that seemed a bit high. An initial glance on the pod was not enough to ascertain the actual revenue numbers, but I know Dan Smith took a deeper look along with some others on the team. Dan, if you want to jump into that, and I'll pull up some data.
Yeah, perfect. So virtuals got brought up, and I felt trapped to just parroting something I saw on the internet. Usually a bad call. Confirmed this time was also a bad call. So there was that popular Dune query for virtuals that was circulating around that cites its revenue. And interestingly enough, it takes the current virtuals price and multiplies it by any virtual tokens received historically. That is not how you calculate revenue. That is how you'd calculate something like a treasury value, right? You have the total amount, you multiply it by the current price. And so it was vastly overstating the amount of revenue generated by this application, given the insane price run up that the token has had. And the revenue is captured in the token itself. So we reworked a bit of this that I think Danny's throwing up on the screen here. And it's the revenue numbers are still fantastic. So there's like basically two metrics here that we're looking at: gross revenue and then net revenue. So Virtuals charges a 1% fee on all trading volume as their source of revenue, and they also have like a smaller launch fee associated with that, but largely the swap fees are the bulk of the revenue. once a protocol or once a virtual agent has launched, so it's in the bonding curve and then launched, we call that like a graduated token. Once it has graduated, the swap fees actually go to the agent creator itself, because there are costs with like keeping this agent alive, and like that's a subsidization of it. So I think a lot of the other public dashboards have included this as revenue as well. There's like a pretty good argument to make if whether or not it is revenue. Right now in this query, we just counted it, but are also including it in gross revenue rather than net revenue. So basically the net revenue is all of the money kept by the protocol, generated and maintained and kept by the protocol. Net revenue is fantastic. It's doing roughly 2 to 4 million a week in net revenue. And when you start annualizing these numbers, like you're somewhere in the ballpark of $100 million a year. It's a fantastic business. So they are doing very, very well. But the $55 million number that was circulating around, or Virtuals has run up since that last podcast as well. So it's probably even higher now, given the incorrect calculation. That number is not correct. Again, their weekly volume or weekly net revenue is somewhere in the ballpark of like 2 to 4 million, which is fantastic. There's no shame to be had around the discrepancy there. But yeah, we just did want to follow up on that since we discussed it in the last pod, and we're going to build out a dashboard around this. We'll host it on the Blockworks Research website that really walks through the activity and the financial side of the Virtuals protocol itself.
So Dan, TLDR, the public number with the incorrect calculation today is around 75 million, and the actual number is around 15 million cumulative, or 14 million.
Yeah, I think it was like 17. So, right, it's a pretty significant discrepancy from the circulating number, but again, nothing. It's like a fantastic number still from a growth perspective. And it's interesting. We also just so I've been tracking the percentage of DEX volume on Base driven by Virtuals tokens, which has been steadily increasing up and to the right. I don't have anything on my screen right now, but if you go to optimism.blockworksresearch.com/base, you can see our Base dashboard, and one of the tabs there is the DEX activity tab. And within this, there is at the very bottom of that dashboard, there's like a section on Virtuals itself. And the amount of volume has just been up and to the right on these tokens, which is unsurprising as the attention has been up and to the right and people are actively trading these AI agent tokens. So we also did the same thing for Solana. Now, Solana's AI scene is a little bit different. Like everything on Base launches through Virtuals for the most part, whereas tokens on Solana actually tend to launch through PumpFun. So one, that's been a very interesting pivot of PumpFun going from like these pure, animal meme coins to actually like, air quotes around real projects trying to build AI agents using PumpFun token launches, which has been fascinating to see. But we actually broke out the Solana DEX volume driven by AI agents as well. It's about 2x the dollar value and roughly 10% of 2x the dollar value that we see on Base through Virtuals tokens, and roughly 10% of Solana total volume for DEXs. So also seeing the same trend on Solana, which is no surprise. That's where like Zero Bro or AI16Z or a series of other ones have all launched from. So yeah, just been interesting to kind of quantify the impact of the AI token narrative, because you obviously see it on Twitter. Sources like Kaido that look at market share of mindshare have AI at like 60% of CT mindshare, and again, you're also seeing that in what's happening on chain. So interesting to just kind of like take a holistic view at this narrative.
Yeah, I think the point, and I think we mentioned it briefly last time as well, but it is interesting at least that Virtuals has been able to capture and like maintain a greater portion of the volume of these tokens like on their platform, rather than that migrating to the other like Base ecosystem DEXs. Whereas for like PumpFun, I think the sort of ultimate effect of AI agent trading, while still beneficial to to their fee revenues, is a bit different, since once they get large enough, they graduate, go to Radium, etc. They lose that fee on volumes traded. So there is sort of like this continuing revenue for Virtuals, assuming they can kind of keep that, maintain these agent tokens like within their own ecosystem, if you want to call it that.
I think one more interesting point on the PumpFun side of things is, I just think this is a ridiculous stat, but PumpFun tokens have now hit a collective market cap of over $10 billion, which is nuts. And if you look at, let's see, the top 6, 1, 2, 3, 4, 5, 6, 7, 8. All right, let's look at the top 8. 7 of the top 8 are AI related, one of which is Fartcoin, which is loosely related, I would say, but there is AI lore attached to Fartcoin. So definitely 6 of the 8, but arguably 7 of the 8 are all AI related, with the one exception being Peanut, which is fascinating to see that PumpFun really is the launchpad of the Solana AI narrative. I don't know if PumpFun's going to launch a token, but like that's a crazy one to think about. $370 million in revenue, actually cash flow generating. It's continuing to stay in the narrative. It's been well over a year now. I don't know what their plans are, but that's one that I think about on a daily basis.
It says something about the stickiness of the platform, which I think a lot of people weren't prepared for. Yeah, you can still debate on whether or not there's longevity in meme coins. I'm on the side of longevity, but you can also argue that pump fund service is like a commodity. But there is like this like liquidity network effect, and for a while there was like this social network effect too with the streaming platform, which I think they'll bring back. So it's going to be hard to like pick apart that business, I think, or at least empirically we're seeing that it's hard. Theoretically, could Binance like do some launchpad thing, or Coinbase, or another competitor? Like, yeah, but I don't know. If I want to take risk, I can. It's habitual where I just I just type in PUMP in my browser and it comes up, and like that's where all the risk is. So they have that network effect now, it seems.
Yeah, which is crazy because I was certainly in the camp that it's like, okay, like this is interesting or whatever, but it can be on any chain. And now it is on every chain. Every single chain has a PumpFun clone, and not the rest of them combined don't even like show up on a chart if you put PumpFun activity next to everything else, which is fascinating. There really is no second player in that space right now. So that definitely caught me off guard. I certainly faded the stickiness of it because you're right. Like there is no real moat around it. It just has this like weird cultural lore that crypto loves. On the discussion of longevity, I think it's an interesting one. I don't think the game as is really has a ton of longevity in it. If we zoom out and look at the evolution of this game through time, again, it started with NFTs and that game kind of burned out. And it's like, yeah, it's still sort of alive. It's still around, obviously. Teams like Pudgy Penguins are still doing a good job of executing on that NFT-based vision. But that's still really the same game that's being played as in like PumpFun meme coins. It's just taking a different form factor. And I think you're already starting to see that the form factor of the earlier part of 2024 versus now shift a little bit, where it's like, okay, they're not just pure meme coins about some fictional animal. They're now like, you sort of have to pretend like there's something there with an AI agent to like, I think we're just seeing the rotation of the game or the evolution of the game a little bit. So the question is like, is PumpFun in a position to keep adapting to that? And so far the answer there is yes. Again, as we just walked through, they're now an AI token launching platform.
That's really interesting. 7 of the top 8 coming AI coming from PumpFun. I didn't see that coming. And so my takeaway from that instantly, my thought was, okay, so the play is because they're graduating to Radium, this benefits Radium as well. So like instead of virtuals capturing it all on base, like Radium is actually benefiting a lot from the AI meta as well. So okay, good to know.
Yeah, that's also another interesting one because there's always the people saying, like they can just internalize that. They should have built that the AMM function themselves and kept all that swap revenue, which is, largely that like makes sense. But it also not doing that enabled them to launch with little to no effort at all, right? They built 2 programs to launch the bonding curve tokens and to create the actual tokens themselves. Like that's literally it. And so it's almost like if you internalize that piece of it, do you like break that sacred lore and that cultural dominance that you have? So it's almost like if it ain't broke, don't fix it type thing right now. It's like, yeah, sure, they could generate more money, but like $370 million in like 16 months is nuts. So it's almost like, do you even risk touching any of that?
Yeah, I mean, apart from time to market, it just also made it seem more fair too. Radium was an existing pool and you just plug in with DeFi all on one chain. And it just, the bonding curve first aspect was fair. And then it gets graduated to Radium, made it also seem like, okay, this is a platform that's trying to do right by me. So, yeah.
And last piece on this is Orca actually recently launched like a permissionless token launching engine, if you will. They probably looked at Radium getting the PumpFun blessing, and we're like, wow, that's fantastic. Like we would obviously love that level of activity as well. So I maybe that's the response. I haven't looked too deeply into it, but I do find that interesting as well.
I will push back on one point, and I don't know that it necessarily is the case that NFT trading of last cycle has morphed into meme coin trading of this cycle. I think even prior to NFTs, I mean, meme coins had already existed. Doge had been around since 2014, 2013. And even on ETH and Binance Smart Chain and these other chains, like there were quote unquote meme coins popping up. You had your baby Doge coins and your like all the spinoffs at that time as well in this like similar attention market. I think a lot of the maybe more recognized meme coins from last cycle were probably more like Ponzonomic tokens, where it's like your Safe Moon or your, tax on trading volume type tokens, where you just need to buy in early enough so that when if you're able to sell out and take the hit on the tax, enough people have followed you in that you still make some money on it. I think that captured a lot of the kind of similar like in the trenches, degen attention from last cycle, maybe prior leading into the kind of NFT craze. But I think this overall theme of like trading attention, which is certainly like what these pure memes are with no fundamentals is, that's definitely just been like a gradual up and to the right as we've moved along. And I think the key reason that PumpFun has been so successful is just simplifying the like assumed rules of the game. You used to have to create the contract, write it up, deploy it. People had to look at it like, rug checker, check for mint functions, et cetera. And I think just the standardization of token contracts, taking out the risks associated with buying these tokens has simplified that for participants and just made it easier to participate. And that's really just been like the biggest key to their success.
Yeah, I think that's a totally fair take. You're definitely taking a more intellectual view. I'm certainly being way too reductive there and just saying the who's holding the crown of attention trading is really my point. But I agree.
Yeah. And I think your point is correct that like it might be Ponzi tokens or NFTs or meme coins or AI, but like ultimately I think that like this idea of people trading the attention that will continue on. It just, it might be a different flavor in another year. We'll just have to see. Cool. Let's move on from memes and AI. We've talked about them at length. Mark, you recently wrote a couple of reports or notes updating some thoughts around Bitcoin and ETH. I guess we haven't talked generally about just Bitcoin and ETH as assets on OX in maybe a while. Hey everyone, we'd like to give a special shout out to the sponsors of today's episode, SKALE. SKALE is built different. Unlike other layer ones, SKALE is offering users a network of gas-free, interoperable EVM L1s where user experience comes first. SKALE operates like the AWS infrastructure model where developers pay for space in the network in SKALE tokens to validators. Essentially, SKALE has chain fees and not gas fees. This allows for free transactions on SKALE and has saved 46 million users over $9 billion in gas fees. Explore the gas-free ecosystem at skale.space/ecosystem and follow their journey on X at SKALE Network. Visit the SKALE Research Hub to learn more about the gas-free architecture and growth of the ecosystem. That's skale.space/research. Ledger is the global leader in digital asset security, trusted by 7 million users and securing 20% of the world's digital assets. In recent years, Ledger has built a comprehensive ecosystem of products and services, making digital ownership more secure and accessible for everyone. Ledger's newest devices, Ledger Stacks and Ledger Flex, introduced the world's first secure touchscreens, making it easier and safer to manage your transactions and assets. Alongside Ledger Stacks and Ledger Flex, they have also launched the Ledger Security Key app, offering a safer alternative to traditional passwords and enhancing your digital security. Follow the link into today's show notes to get started with Ledger today. I want to kind of recenter us, and I guess looking into 2025, like let's kind of go back down to the, thoughts and fundamentals around these two assets, maybe starting with Bitcoin. If you want to kind of go in on some of your high level takes, and I've got some data and charts ready from your reports to pull up as well.
So Bitcoin's had a great year, 2024, obviously up like 125%. I think it was if you were to like group it, best performing asset, it was among the top 4. I think Nvidia was one of them, and then MicroStrategy was another one. I can't remember the fourth, but basically 2 of the best performing assets in 2024 were Bitcoin related. Ethereum, for all the hate that it's gotten, has also done pretty well. I mean, like 40 something percent in a year. And I mean, this is what happens when you're in crypto. Your idea of good returns gets skewed. But 40 something percent in a year is outperforming, even the S&P 500, which also had a great year, right? So I think, and especially for Ethereum too, it's such a large, it's a $400 billion market cap. So, I mean, 40 something percent is pretty good for that. And then, for Bitcoin, some quants are pushing back, saying like, on a sharp ratio, risk adjusted measure that, gold and Bitcoin, had a similar sharp ratio. And so, in terms of portfolio, they got, similar gains, and gold has also had a great year. But I think one thing that they miss out on by just looking at sharps in a portfolio is the skewness of the returns. So if you look at like Bitcoin's skew distribution versus gold, you can see it's much more positively skewed. And what that tends to mean for an asset is that there's greater chance in the future of, those high outperforming days. So yeah, and then apart from the price, if you just look at fundamentals, it's been a bit mixed. So Bitcoin's REV, for example, has been like mostly flat for the past like 3 months. And transactions down on the network. Bitcoin doesn't really have a proper way to capture MEV tips and stuff. So all of that goes to the miners. That's why, I think some of the miners are a great play to capture MEV, especially if things like ordinals and stuff start to pick back up, which we are kind of starting to see right now. I don't know if this is a blip, like you would say that the NFT comebacks have been a blip. But last month, it's been increasing for a few days. There's a little bit of a trend. I'm not sure what to make of it. Maybe January will give us a little bit more clearer guidance on it. But December was pretty good. And on the next slide here, I kind of wanted to do like daily data to get like a little bit more in depth into like it. And like the last day here, I think it was the 5th of Jan, 40 something percent of the transactions on the Bitcoin network were ordinal related. So that's like nearly half. And I mean, this is why the number of transactions on Bitcoin has fallen, because I think this ordinal activity has increased the transaction fees on the network. That coupled with Bitcoin going to close to 100K, and it might be seen as like bearish Bitcoin block space, but it's just being taken up by much more expensive, ineffective ordinal Gen 1 transactions. I don't know if anybody has any thoughts on whether we're going to see a resurgence in this or even runes or BRC20s, but yeah.
I mean, just glancing at it and thinking back to the beginning of 2024, when I think ordinals and Bitcoin NFTs and inscriptions like had become quite a loud sort of bang on in people's minds. I mean, it does seem like there's been quite a strong resurgence here. I think jumping up back to nearly 50% of the sort of transaction share. I mean, we're closing in on levels around the kind of peak excitement that we saw early on in 24. So I don't know that I would necessarily, maybe on the weekly and the monthly basis, right? It might still look like a blip from the fee revenues that get passed along, but at least in terms of the activity, that's interesting. But I think maybe the one point would be, are we really just looking at like some price reflexive activity here where, Bitcoin has had another good run at the end of 24, around the election, and people, they jump to what they think are the beta plays, right? They want to go and buy Bitcoin NFTs, et cetera, on chain. They're hoping for additional outperformance, maybe, or some additional beta to Bitcoin now that it's kind of had a move.
I've been a certified hater of runes and ordinals since day one, and it's not going to change. I think the most interesting thing is if they can get ZK rollups to work on Bitcoin, then that's going to solve all of the problems they're looking for. And I don't know. I mean, I think we're pretty far out. Like, I don't think that's going to be a this cycle thing from what I can tell and reading in that area. But Mark, you'll certainly know better than I there. But that seems to be the answer that they're looking for. Bitcoin wants to generate just enough fees to maintain miner profitability and like not a dollar more. Runes and ordinals are just stupid. Like they're not even fun to trade. It's a pain in the ass. It's a horrible experience from the wallet to the front end to the product. Everyone kept telling me I was an idiot and that we were just early and those things would improve, but like they fundamentally can't improve. So I also don't see how that's going to happen as well. Now, will people gamble on these? Yeah, absolutely. But I don't expect it to be like a meaningful or sustainable amount of activity.
I think the UX has kind of improved. Like Magic Eden makes it a little bit easier. It's kind of like trading any NFT. But I also think they're as dumb as most NFTs are, and I'm not really involved in that space. But again, I think most physical art is dumb. So who am I to say? So I mean, to each their own. And on that note of ZK on Bitcoin, I mean, just like with BitVMX and BitVM and all the iterations trying to bring like optimistic roll-ups and bridging to Bitcoin, there is seemingly some kind of breakthrough to do ZK natively on it, but it just seems very far-fetched, and if it happens, very expensive, and it requires a little bit of a trust assumption on the client side. And so I 100% agree. I don't think that's happening this cycle, and I don't think there's a push for this opcode called OPCAT, Operation Concatenate. Not to get too much into the details, but if this code, which we used to exist on Bitcoin back in the day until Satoshi removed it for DDoS vector reasons, if this opcode were to come back, then we could actually see some ZK rollups, like proper ones on the Bitcoin network, which I think would be very useful and probably a little bit bearish for Ethereum, because what's the point of Ethereum when the hardest, most secure asset is doing it? At least that's the counter argument to it. But I don't think any of that is happening this cycle. The Bitcoin community moves very slow. It's kind of ossified, and SegWit 2017, that was very controversial after the block wars. 4 years later, we got Taproot, and then 3 years later, that became controversial because of things like ordinals and runes. So I don't think we're seeing this anytime soon, but I really hope to be proven wrong.
I have a question on Bitcoin Capital, Bitcoin native capital. Thinking about this ecosystem a lot, it seems like it's a no-brainer that to consider it seriously from an investment perspective, because there's so much capital that's not doing anything there. I think the problem, though, is that there's a risk that the capital doesn't want to do much at all. Having now met some Bitcoin whales, they love not moving their coins. So you have a holder base that's very unlike the degen native holder, or like the crypto native degens on Ethereum and Solana and all the other chains. So, let's assume that these L2s and wallet providers can get things to start working, and like some of the pain can be abstracted away. I don't know. What do you think about the actual TAM of this ecosystem, given that like very ideological holder base?
Yeah, I mean, firstly, I think you're right. The amount of capital, I mean, I did this like rough calculation. Ethereum's market cap to TVL, or TVL to market cap, I should say. And I think it's like 15%, and then maybe it's like, I don't know, around 70 billion of assets. And for Bitcoin, which is like 5 times the size, means it needs 5 times less to match the number one TVL chain by far. So that's like if 3% of Bitcoin move to these L2s and move to these like DeFi projects, that would be as much as Ethereum. And 1% would make it the second largest TVL chain in the world. So, and can we get 1%, 3%, 5%? I think so. I mean, if you look at last cycle, it might not be the old OG Bitcoin whales, but last cycle people were putting it into like centralized entities and getting robbed the hard way with not your keys, not your coins, right? And then some of these L2s, we've seen capital, we've seen Bitcoin move across some of these staking and restaking projects like Babylon and Lombard. We've seen a lot of Bitcoin move over in the past few months. So, I think there is demand for people to do things with their Bitcoin. Like people want to do something with their Bitcoin. And I think initially it's not going to be the cypherpunks, the OGs who do it. It's going to probably be people like from the Ethereum landscape who are used to bridging between L1s and L2s who decide to buy some Bitcoin and try it out and experiment with it and put it into these different platforms. And a lot of these L2s actually are EVM based. These Bitcoin L2s are EVM based. So it's going to be something that they're very familiar with and comfortable doing. So I do think there's an opportunity for that. And I don't even think it necessarily needs the security of a true, ZK proper roll up stage, whatever you want to call it, whatever the Bitcoin analogy for that is. We saw capital move over to the Ethereum L2s. And even now, they're still basically, at the end of the day, it's a security multi-sig counter, right? Like people have been moving money to these centralized sequencer things without the full stage 2 proper decentralization. So I don't even think we need that to see that much capital move. But I think the Bitcoin L2s still need a lot of work to even like compare to like Ethereum L2s, because Ethereum L2s are 4 years in the making, like seriously, since like the full acceptance of the Ethereum roll-up centric roadmap, and like there's 2 of them on stage 1, and stage 2 maybe coming out next year. So that's 5 years for something that the entire community pivoted to, and Bitcoin's even slower moving. So I think it's still going to be some time, but maybe we see some of that, the beginnings of that in 5.
I want to just highlight the one point you made, Mark, around moving just like 3% of some Bitcoin over. I would imagine, like when we think about these ordinal transaction count shares of overall Bitcoin transactions, for example, we're probably looking at like maybe another similar ratio there, where maybe 1% of people who have or use Bitcoin are basically driving that activity. So I guess is it at least interesting to see that such a small group can actually have a pretty strong impact on the sort of network dynamics, the fees paid, et cetera. So even if it's a small fraction and the largest whales aren't doing anything with their Bitcoin, there's it's a benefit to the network from a fee perspective, at the very least, if that activity continues, regardless of anything else. Does anyone else have maybe any last takeaways on Bitcoin, or we can pivot and jump to talking about Ethereum? Mark, I'll let you take it away.
Yeah, so last report, wrote on Ethereum, this is a big asset. The momentum is not with it like with Sui or Base or Solana, obviously, which was kind of surprising when I saw that December had Ethereum broke a record for the most transfer volume ever recorded in a single month. And I think it was something like over $740 billion of stablecoins transferred. And, for something that the entire community touts as, one of the best use cases of crypto, i.e. payments, and especially with stablecoins, like, this was kind of surprising to see. And this is coming from a chain that everybody's saying, nobody uses this chain. It's slow, like every activity is going away, but it's doing record volumes in transfers. And where it comes from, I don't think it really matters that much. Like if this is sexes, moving money on chain or between their wallets, like what does it matter? The point is the sexes are there. If the sexes did this amount of transfer volume on another chain, it would be a bigger deal. But this kind of stuff doesn't even make, let's just say news or makes, anybody's attention, which kind of also shows how mature the protocol is at this stage. Like this is almost expected for Ethereum to be doing these kinds of stablecoin transfer volumes. I don't know if anybody has any counter takes on that.
Yeah, it's super interesting. Another thing I would add to the stablecoin front is when you look at market cap of stablecoins issued across the industry, Ethereum's dominance is like breathtaking to some degree. And I mean, they're night and day ahead of the rest of the industry. They're at about 110 million. Tron comes in at about 50, and then everybody else basically sums to 50, maybe. It's impressive. So that's another piece I would add here. I probably push back a little on like the relevancy of transfer volumes. I think it's most useful for Ethereum because it is so expensive to use. So therefore, you see the extreme optimization in how the chain is used, and like just general wash trading type activity is extremely unprofitable. So I think it is actually a pretty good signal for Ethereum, but I wouldn't really extrapolate that much further beyond Ethereum. Some examples of that. So Solana has like some wash trading that is going on is related to zero fee DEX pools, right? If there's no DEX fee on the DEX swap, the transactions are extremely cheap. And what's happening is someone is taking out a flash loan, shoving like a $10 million swap through it, and just like looping that. It's like literally a volume bot. It's all targeted towards like advertising meme coins. It's very easy to filter that activity out of DEX volume, right? If there's no fees on the pool, it's probably not a real pool anyways. However, it's not as straightforward to filter that out of like transfer volume. So right now, like us included, pretty much every data provider is going to give you the full amount of USDC or USDT or whatever stable coins that moved on the chain. You can filter that deeper to get like richer insights, but that's just like a whole different ball game. And because of that, you do see a lot of noise, right? Like if you look at the Solana chart, like this exact chart, there's like 2 days last week where there was over 800, 900 billion dollars of transfer volume. Again, this is just taking out a flash loan and running a DEX swap and then repaying it. That like one activity that's like relatively useless massively extrapolates this number. And like, I don't know, that's not super, super useful to me. Another example is like incentive programs. So ZK Sync just kicked one off, and they, it's like their Ignite program, I believe it's called. And now you see like aggressive lending usage, literally day of. And so lending programs that are on that incentive program, there's now like a value to capture by shoving USDC through that protocol. So it's like this and active addresses, I think, are both useful metrics. But like your first reaction, at least my first reaction when I look at these things, it's not like, oh, wow, look at this growth. It's like, okay, like what's driving this? Because that's where it gets super interesting, right? Like if I just looked at the ZK Sync one, an hour ago, and I was like, oh, that's okay, a huge spike. So like, what's the driver here? And it's like, oh, it's like the Ignite program through lending markets. Super interesting. Like, I wonder how the two lending markets that are involved here are going to fare. Like, are they actually good products, strong businesses, and will be sustainable? It can like leverage this incentive program to be useful products. That's obviously useful back to the chain as well. So yeah, that's kind of how I look at these metrics. Is like first reaction when there's a change is like, oh, why? Like, what's driving that?
Yeah, I've thoughts as well. Mark, I totally agree. I think it's like a lot of this is centralized exchange volume. I think, Dan, you have some numbers on that where it's like, I don't know, 40 to 60% of stable coins across chains are held on centralized exchanges. I don't think that that's a bad thing, but it is like a qualitatively meaningful thing. Like if you're just like clearing trades with stables, like that's cool. It's a big win. But like the historical path dependency like makes this number a lot less relevant for me. And two, when I look at like the slow moving nature of stablecoin balances across chains, like I know it doesn't predict rev, right? Like Solana, like it was very much like a lagging indicator for the rise of Solana. It was a lagging indicator for the rise of base. So like it is useful from first principles, and I think that there is a future state where like I think the Van Eck team tweeted this out where like they're seeing app downloads for like Western Union like decline like pretty dramatically. So like there is some future state where like payments, like the nature of payments do shift. But I think just given the historical path dependency and where these things have been issued, like I don't know, it doesn't. It's useful, but I'm not changing my like investment decisions based on um, changes in stablecoin transfer volumes.
Yeah, I think you touched on something pretty interesting there with like the centralized exchange piece, both Mark and Ryan on that one. I was looking at the data the other day, and I think it was about 60% of USDC on Base is like Coinbase seemingly just parking user funds. They announced that they were going to be doing this. I'm not saying there's anything nefarious there. It's just like an interesting observation. Because when I historically used to look at this, the stablecoin supply number, I was like, oh, that's like a great, indicator of the amount of capital that's like ready to be injected into the economy. Where now realizing that over half of like Arbitrum and Base specifically, the USDC parked there is, or stablecoins more broadly, is on centralized exchanges. I'm like, well, not even on exchanges, it's like reflective of user funds being deposited on this exchange. And like they run their own risk management strategy of like where those chains are at, or where those funds are allocated. So when I now look at this number, I'm like, okay, like you kind of do need to discount the total amount for like what is actually, sitting in EOAs, like ready to be deployed into the economy, because it really isn't this like holistically large number. And even like another piece on this that I've been looking at is Artemis does a really, really good job with bridge flows. And obviously you count as many bridges as possible, CCTP from Circle being one of those. But that is actually how Coinbase like mints user funds onto the chain as well. So there probably is some clouding of that inflows metric based on, Coinbase just bringing users USDC there and then parking it there. Haven't looked too deeply into that one, but that's like another place that could be affected by this same sort of analysis.
This is somewhat related, but like as we're getting, like you mentioned earlier, how like these numbers are much more trustworthy on Ethereum because the fees are higher, it's less scalable. Washing is unprofitable. Like when all these blockchains like figure out how to do the 500,000 million TPS, like how hard it's going to be to sift through all this data. Like Dan, your job's going to get so much harder. I do not envy you at all.
Yeah. Also, the whole 1 million TPS thing. That sounds great until you try to run a damn Dune query over 1 million TPS. That's just, yeah. We're already thinking about that and taking action ahead of time.
My queries time out so often on like the most basic stuff on Dune. Like there are bottlenecks to solve.
At 1 million TPS, that sounds like good problems.
True. Yes, 100%.
Yeah, I think we'll just have to scale our data analytics capabilities at that point as well, as difficult as it might seem now. I think that was a pretty good maybe dive into this topic. I know we have more on ETH, but I think we might have to call it here. Do we have any maybe last big takeaways on Ethereum? And let me pull up, I think it was mentioned. Let's just jump to the rev chart, the REV chart. Any last big takeaways now that the stablecoin transfer volumes discussion and caveats are out of the way?
You either got to beat Bitcoin at being mimetic money, which is going to be incredibly challenging, or you have to make a lot of money. Those are sort of the two paths. And to be fair, Ethereum returned about $507 million to token holders in Q4 of last year, which is fantastic. Solana was 508 million in the same period. So it's still like a huge number. It's just, when I look at this chart, I see a cyclical decline. And the question is, what's going to catalyze a change there? I'm not totally convinced the proposed changes to the L1 are going to be enough, but I think they're like continued marginal improvements. But yeah, I'm not super excited about the prospects of this chart taking a turn. And blob fees are doing great right now. They're like actually influencing REV. Of course, yeah, they're great. Look at that. Dude's ready with the charts. Yeah, they're at about 10% now, which is fantastic. But Pectra is going to scale the blob count and capacity. So this goes back to zero is, I guess, the TLDR.
Okay. Yeah, it seems like going ahead, we're at a kind of an unanswered question of whether we can continue to scale REV or if towing this line on growth, expanding blobs, keeping the cost of those low, keeps us at some kind of leveled point for the time being. I think we'll just have to see.
Yeah, I think they've done everything right on the world on the supply side as well. Like supply side economics are fantastic. I wouldn't change a thing. It's like, what are you going to do to drive demand side? And like the L2 roadmap can work, right? Like that's, if you look at Bitcoin, that's like what you would want it to do. The question is like, how do you back into that like mimetic money thing? And I think that's infinitely harder.
Yeah. Base has been the one, key massive demand driver at this point. I think we'd hope to see more bases for Ethereum's sake, expanding in that same fashion, and maybe we'll get that. But I think we can call it there unless anyone has a big takeaway for the episode. I think maybe my key call to action for people that get into the trenches is to not ruin your credibility launching and then dumping a fresh meme coin onto your follower base.
My takeaway is join the Telegram chat.
I think I end every 0x episode with this, but study the ETTFs.
The best basis trade of all time.
Cash flows, Connor.
I got nothing. Don't sell into TradFi fear on rising rates. Rates don't matter. Rates aren't real.
You heard it here first, folks. Never die.
I love it. Rates aren't real, says Cash flows, Connor. We will see you all again next time. Thanks for coming on, guys. Thanks for a great app. Thanks again to Scale for sponsoring today's episode. If you weren't already planning to, make sure to go check out Scale's ecosystem. Explore the gas-free ecosystem at scale.space/ecosystem and follow their journey on X at Scale Network, and visit the Scale Research Hub to learn more about the gas-free architecture and growth of the ecosystem. That's scale.space/research.